But I think it's very bullish for Bitcoin and Ethereum because...
Why?
Well, gold moves first and then Bitcoin catches up. Mm-hmm. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. Mm-hmm. That puts fair value of Bitcoin, like 1.6 to 2 million if it matches gold's network value. Mm-hmm. So I think it's actually helping Bitcoin's future terminal price.
Gold's surge is not just a sideshow here. In this view, it sets the reference point that pulls digital scarcity higher. If the monetary metal's network value resets upward, the argument goes, Bitcoin does not get capped by that ceiling, but rather inherits the upside through parity logic and adoption spillovers. That is the framing for a cycle that looks less like a bubble and more like a relay race. The baton starts in gold's lane and then gets handed to Bitcoin.
So you think that if gold settles at 5,000, Bitcoin, you take the gold market cap divided by the number of Bitcoin, then you get $1.6 to $2 million per coin. What's the time frame for us to get there?
Well, I can see that in 5 years for Bitcoin. So I think
5 years.
Yeah. Yeah, I think Bitcoin. Yeah, I think Bitcoin doesn't get capped by gold. It actually gets pulled up by gold. Mm-hmm. And then, because it's growing the monetary base, right?
Mm-hmm.
That calculation is simple on paper and daunting in practice. It is a thought experiment that turns into a roadmap only if new pools of demand keep arriving. The story points to a pipeline of structural buyers and to a macro backdrop where liquidity is not a headwind. If those pieces line up, a 5-year window sounds less like bravado and more like a scenario worth considering.
I think what's really stood out is that you can explain gold's move by just pure technicals. Like I was talking to our technician, Mark Newton, yesterday, and he says that gold had a cup and handle pattern that the breakout was July of this year. Mm-hmm. And so the measured move should have taken it up to where it is now. But let's say price leads fundamentals. I think that July is also the time that the stablecoin industry started printing a lot more creations.
When technicians and flows rhyme, markets tend to trend. A technical breakout in July aligning with a burst of stablecoin issuance suggests a fresh bid that is not just narrative. If crypto-native liquidity is over-collateralized and hunting for hard collateral, gold becomes the bridge. And bridges, once built, usually carry traffic both ways.
So I think the stablecoin industry has been printing a lot of dollars. They're over-collateralized, and I think they've been buying a lot of gold. So I think that the stablecoin industry has been the newest bid for gold.
More so than even like a China central bank?
Yeah, because they've already been present. The central banks have been present for some time, but there's somebody new buying gold on top of the retail buying gold. And I think that would be my guess. Because, like I've now there's like 7 or 8 gold stable coins. Yep. Plus, there's big stablecoin issuers. And so that could be the bid to gold. Mm-hmm. Now,
if stablecoins are the stealth whale, then crypto is already entangled with the metals rally. That interlock changes how Bitcoin benefits. It is not only a rotation from gold into Bitcoin later. It is a feedback loop where the same capital stack can support both assets on different timelines, with gold moving first and Bitcoin following with beta and reflexivity.
What about gold? Gold's been on this historic run. Do you think it's real? Do you think it's manipulated? Do you think it can continue?
There's a lot of reasons gold probably is going up. And at Fundstrat, we don't do commodities. I kind of regret not recommending gold because it's been so great. Because, generally, I like to be helping our clients be involved with things that are going up. So I think gold's move is like
a good strategy.
Yeah, exactly. I don't want to fight it. And
what kind of business do you have? I help our clients' portfolios go up.
Yeah. So gold's been amazing.
Humility toward a winning trend is telling. If the goal is to be aligned with strength, then ignoring gold's move misses the setup for the next leg in Bitcoin. Momentum begets momentum. The bridge asset rallies, and the digital heir apparent gets reevaluated on a bigger canvas.
As you know, Bitcoin makes its move in 10 days a year. So are Bitcoin's best days in the fourth quarter? Probably, because we have catalysts, the Fed's easing. We have a shutdown that's been risk off. We have China-US tensions that, look, every time there's a headline on China, like Bitcoin takes a gut punch, right? Because it is money flows and deleveraging. So that goes away. We have seasonality that favors stocks moving up. Stocks moving helps Bitcoin. So to me, the chances of Bitcoin having a huge fourth quarter are really high, and not all of these would be tailwinds for gold. So I wouldn't count. I still think it's possible for Bitcoin to hit 200,000 by the end of the year.
Momentum also lives in the calendar. A handful of explosive sessions can decide an entire year. If easing policy and friendlier seasonality remove headwinds, the asymmetric days are still ahead, and they do not need gold's help to arrive.
Well, most of the crypto people I speak to expect a 4-year cycle. And they're adamant, that maybe Bitcoin peaks early next year. But as you know, when something is so strongly held, it's very unlikely to be true. So either Bitcoin's already peaked or we have a longer cycle. I'm more in the camp that it's a longer cycle.
But there would still be 50+% drawdowns in the future, or there's a kind of cycle is broken and you get something different?
A longer cycle thesis fits a world of new buyers, new rails, and slower distribution. It also keeps risk in the frame. Volatility does not vanish just because institutions have arrived. A higher terminal value can coexist with deep air pockets along the way.
That the people holding Bitcoin have seen 2 drawdowns of over 80% in 4 years. That's never happened in the stock market.
Yeah.
Right. And so in this crazy way, actually the crypto people are more prepared for market volatility than the stock people. But it's like, if you haven't gone through the pain, you just don't think that it exists or something. Right. And the stock people don't acknowledge the fact that you kind of had to be insane to hold through all the volatility in crypto.
Battle scars matter. If the marginal buyer understands capitulation, they also recognize recovery. That psychology can sustain conviction when models alone would have you fold.
Well, to me, I've always thought the crypto market is much more of a pure free market kind of macro thing as to how it was originally designed. There's no hours of operations. There's no circuit breakers. These less algorithmic trading. It's just very, very much how markets, I think, used to operate. Maybe
over the counter.
Correct.
True over the counter market.
And today the stock market is not that. And so you kind of have to pick up the skill in a pure market, and then that makes you better at the somewhat manipulated game.
Yeah. So I've found some crypto guys are really even good at timing the market. They've been getting out at the right time.
That contrast between a raw arena and a padded one hints at why cycles can stretch. A market without training wheels can digest shocks faster and reward those who read tape over textbooks. If Bitcoin inherits gold's value while trading in a freer venue, the result is not just higher, it is wilder.
You've called it the most hated rally. The recent sell-off because of Trump's tweet, you called a flesh wound. You're uber bullish. I am as well, so I'm biased. But why do you think it's so hated? Why do these people want the market to go down? Why do they want the U.S. economy to tank?
Yeah, I can empirically show it's the most hated. One of the best measures of large investor sentiment is the AAII Net Bulls Index, bulls less bears, because it's been run for 40 years.
Skepticism is a feature, not a bug. If sentiment is this sour while price grinds higher, the wall of worry is tall, and that often keeps the trend alive. In a world that still doubts, a gold reset can be the spark that forces a collective recalculation. We traced a chain from technicals to flows, from stablecoin collateral to central bank alternatives, and from a hated equity rally to a longer, bumpier crypto cycle. If gold's network value steps up, the parity math points to a 7-figure Bitcoin and a path where digital scarcity does not wait for permission. The turbulence will not vanish, but the destination shifts.
Because it's been run for 40 years. This year, it's averaged minus 11.7. So every week, the weeks through this year. There's only 3 other times in the last 40 years.
Do you buy the thesis that gold's next leg is the fuse for Bitcoin's next era? Or do you think the cycle breaks in a different way this time?